President Trump says as far as he's concerned, the memorandum of understanding with Iran is over. Oil prices, of course, surging in response. They were already on the rise after the U.S. launched fresh strikes against Iran in retaliation for Iran's attacks on commercial ships near the Strait of Hormuz. And the U.S. reimposed sanctions on its oil exports. CNN senior business reporter David Goldman joining me now. This was the fear. This was the thing that everyone was sort of waiting and hoping did not occur. And so the markets, it's obvious how they're reacting.
Yeah, it's big news. It's so big that I brought out the big guns. I got my iPad today. And this is a huge increase in oil. We haven't seen something quite like this in a long, long time. And I just think to give you a sense, we're at $78. That's the international standard. We generally, when we're talking about oil, we're talking about Brent. Look at where we were before the war, right? We were around 73.
So we're getting close to that.
We're above that now.
Yeah.
And we're certainly above the lowest point from after the war, where we fell below that. But this is the thing that everyone needs to be concerned about, is are we going to go back to where we were at, in mid-May, when we were around $100. No one wants to get back down, back up to there. Now, the thing is, gas prices, oil's one thing, gas prices is what we actually pay for.
Yeah.
And the thing is, we have not come even remotely close to where we were before the war. These take time. We've always talked about rockets and feathers and how gas prices come down very, very slowly. It's going to take a while to get down to that. And if oil prices start to rise, this is not going to go back down to below 3 for quite some time. That's something that we need to watch out for. Now, Iran bought itself some time. In the 3 weeks, it was able to get 50 million barrels out of the Strait of Hormuz. That's an incredible amount of oil, and that's all money that was funding the regime during that time. So Iran might not be able to continue to do that, but that is certainly something that is a concern. Another concern is the emergency stockpiles of oil continue to dwindle. We are now down 23% just from the start of the war. So we've lost a quarter of the emergency oil that this country holds. What if there's a hurricane? And what if this is really the start of something big? The other thing that we need to be concerned about is the commercial stockpiles. Only 19.7 million barrels in the pipeline crossroads of America. That's where all the oil comes through. And the operational stress levels, that's when the urn of coffee reaches that bottom and you have to kind of tip it to get it out. That's where we are right now. All of this means there's a lot of pressure on the president.
I like how you said urn of coffee instead of what we normally just call a pot that's been burned on the bottom and you're trying to get those last drops out.
I'm fancy, and that's why I called it an urn. I know you had some coffee this morning, I can tell.
Yes, and it's unfortunate for everyone. David Goldman, thank you so much. So observant, that David Goldman.
The war is having an immediate impact on oil prices, one that we could all see at gas stations soon. Gasoline futures rose 6% today, which is the biggest one-day percent jump in 3 months. So let's turn now to oil analyst Rory Johnston. He's the founder of Commodity Context. Rory, thanks for being with us. How are the markets responding to this news that the ceasefire may be over, that the strait is effectively closed again? How does it compare to how they responded to other things in the past?
Yeah, so as you noted, prices are popping this morning. We're up almost $10 a barrel over the past week. And I think the important thing to note here is that we had seen a fairly aggressive resumption of oil flows through the Strait of Hormuz, particularly ships exiting, the ones that had been long stranded in the Gulf for over 4 months. You were seeing a surge of supply to global markets. The challenge for Iran is that a lot of that flow was going through the southern, kind of what they call the Omani route, and not inside Iran's so-called toll booth route to the northern edge of the Strait of Hormuz. So it's been trying to kind of force ships to take this northern route, and the only tool in its toolbox is effectively drones and missiles. And this is what obviously the United States is retaliating against. But the MOU is fundamentally unbalanced and unstable because both parties left that agreement with Iran believing that it had go-forward control over the strait and traffic through it, whereas the United States believed that we were going back to at least something more akin to the status quo. And the markets were positioned for this to be over. So what you're seeing is the dead stop of flow through Hormuz running up against a market that was positioned for this all to be over.
Yeah. They certainly would like for it all to be over. It's very clear that that is not coming quite soon. Trump said that he may reimpose the U.S. naval blockade on Iran, but that it's just on Iran. Everyone else will be free to move through the strait. Is that true, though? Is that how the markets see it?
No, not really, because as soon as the United States reimposes its blockade on Iranian traffic, Iran is going to fully attempt to clamp down on the strait itself, all other traffic, and reclose the strait. One thing that we've seen through this crisis is that Iran has proven very capable of closing the strait, even if it has not been as capable at trying to stick handle and manage flow through the strait upon resumption. But that's essentially what we're going to see now. And you will likely see the United States continue so-called, Project Freedom attempts to try and ferry across dark transiting ships with their transponders off to try and keep flow moving. But even at the peak of the pre-MOU flow, that was only around 5 million barrels a day relative to a pre-war flow of 20. We got up to upwards of 15 or 20 million barrels a day with that surge of exits. But we're if this does actually go back to a blockade and a fuller resumption of warfare in the Middle East, we're going to see those flows crater again very soon.
Rory, how has the insurance market for ships that are moving through the Strait of Hormuz, how has that changed since the beginning of the war? What are companies paying now?
Yeah, so at the beginning of the war, you would have seen somewhere like 25 basis points, about 0.25% of a ship's value in insurance costs or war risk premiums. Those hit a high of more than 5%. So, in multiple folds of, multiplications of where we were before. Those had settled down a little bit, but I think at this stage, you're going to see those rise again. The important thing here, though, is that while I think insurance was focused on as one of the key considerations in the early war, the profits to be made by transiting the strait do largely cover those higher insurance costs. And the bigger concern is ship owners who worry about losing the functional use of their ship, given that shipping rates remain very, very high, and they want to be around and able to capture whatever profits there are on the next side of this when this ends up ending.
Yeah, that's very interesting. Rory Johnston, thank you so much for being with us.
Data from the Energy Information Administration revealed that U.S. crude oil production set a new record in the month of April under your leadership.
That's right.
Why is it important to keep hitting numbers like this at this moment in time? Why is it important that you were able to get this done and keep it on this trajectory?
Well, when we decided to do this, it's called the denuclearization of Iran. We have to do it. We have to have. They're never going to have a nuclear weapon, and they admit they're never going to have it. But they behave badly. Always behave badly. There's something wrong with them. But when we did this, we thought oil would go much higher, and it didn't go very high. And now it's coming way down, and you're going to see oil drop very low. Now, maybe we'll do some other things that could lift it a little bit, but I don't think it's going to lift it a lot at all. I think oil is coming down. There's tremendous amounts of oil. Scott, what would you say about that?
Yes, so record production under President Trump in his first term. Now in his second term, the U.S. is an energy superpower. It's why we weathered the conflict better than anyone else. And there, just this weekend, Bloomberg wrote that there is an oil glut out there, and we think that safe, secure American oil maybe even should trade at a premium to the rest of the world.
So we have, if you add it up, you take Saudi Arabia and take Russia, two big oil producers, we do more than twice as much. We do more than, so think of it, Saudi Arabia, Russia put together, we do more oil, and that's not including Venezuela. It's pretty amazing. And this all happened during my term. We started it at the first term. Biden blew it because he had no idea what he was doing. But we are producing more oil right now than Saudi Arabia and Russia combined by almost double.